Well, thanks so much for tuning into Talking Point. I'm your host, Niraj Shah. We did a conversation with Andrew Holland along with a couple of other fund managers a month and a half back, wherein Andrew had pointed out to some headwinds in the world which might impact the Indian markets too. Lo and behold, maybe some of them didn't turn out, but some of them did turn out, and we've had a pullback. The question to him today, as the person who heads the largest Cat 3 AIF in the country, is that whether the factors of crude having retreated a little bit from the highs, yields having retreated a bit from the highs, and the markets having retreated a bit from the highs as well, do they present a potent combination for tactical longs and arguably for long-only investors, better valuation opportunities to make an entry into? He joins us right now on Talking Point today. Andrew, good having you. Thanks so much for joining in. I'm guessing all is safe. My question to you is precisely that. A month and a half ago, you had said that there are some headwinds for the world which might impact Indian markets as well. Do you think we are in some ways past those and the markets have factored in some of these already? Or are you still worried about what could happen in the world markets and thereby on India?
So some of those concerns haven't gone away. Maybe they've eased for a little while. Let's talk at the first one, which is inflation. I do feel that the inflation that we're seeing, or the tick up in inflation, is more transitory in nature because, as the global economy starts to pick up, more companies will increase capacity. So that will, bring down prices. So I'm okay in the short term in that one. I think the real fear for me has always been, when lockdown does end and people with all their savings go out and start spending on, services and experiences, that could be lead to higher inflation, which is a little bit stickier, and I think that would be more kind of late summer when those fears would kind of come to a head. So maybe the market's trying to look into that and think maybe that is the case, particularly when the Federal Reserve Chairman Jerome Powell kind of increased the GDP forecast, but still sticking to his we're not worried about inflation for some time. So I think the market, wasn't sure that they like the growth, but they know that interest rates can't remain where they are for so long. I think the second point, though, is really now the kind of probably why the markets have come off a little bit more aggressively is because of this slow vaccination taking place in Europe. There's a real fear now that that could slow growth in the European region. And that would mean, the global economy might take a little bit more time to recover than was expected. And that means your earnings, get delayed by another quarter, maybe. And given where valuations were, which was more of a Goldilocks type scenario of low interest rates, vaccinations taking place, the world economy opening up very, very quickly, maybe it's being pushed back a bit. And that would mean that those lofty valuations couldn't really justify the fact that earnings might not be upgraded or might even see some downgrades in certain areas, like airlines or travel or, hotels, which was starting to see, some kind of expectations of a real return to growth.
Okay, Andrew, let's talk about 2 or 3 talking points. One is this report. So I want to stick a bit to the globe, the NASDAQ, and the fact that tech companies, and there's this note from BofA which spoke about how tech companies are now 33% of the world market cap. And there is, some quarters believe that there is only as much that tech companies can really take over in terms of global market cap before they start retreating. But almost everybody that I speak to is now saying that tech is all pervasive and everything is tech first and everything later. So my question is, are you guys worried about, for example, a natural change of dynamics world over and therefore tech coming off a little bit, and what that could do to one, sentiment in tech and thereby sentiment in India for all of these companies? Because not only do we have a vibrant tech sector, but we also have a spate of tech-enabled companies for the first time coming out in dozens this year as IPOs. What's your view on this?
So, if you look at what's happened since the beginning of the year, actually your Nasdaq listed stocks have probably kind of underperformed significantly because as the global economy anyway picks up, you want to be into those sectors which we talked about before, which would be your economy facing sectors such as banking, industrials, energy, and consumer discretionary. So that's where you're going to see a large amount. To my mind, you see that shift anyway from some of the tech stocks where you have very high valuations. It doesn't mean that one or two of those companies won't continue to do well. I think the biggest worry, though, for me is where I do see some form of a bubble is in these special purpose acquisition companies, which are being listed. Can talk stories of what they're going to do with no kind of IPO type of restrictions, and then acquiring companies and at very high valuations. So that would be my concern if any of that, if any of those special acquisition companies, the bubble bursts there, because that would have a big impact on a lot of these tech companies as well. So that's where I would worry. I think for India, listen, we're at the early stages of a tech, kind of change going forward. So I don't think globally what happens to valuations would have a big impact in terms of the growth story for these companies. Maybe valuations might be a little less aggressive going forward than they were or they are today. But that doesn't mean that these companies won't grow going forward.
Actually, I have a question, and this chart that we put out, Andrew, lays it out wonderfully, right? We've seen this phenomenon in the US wherein loss-making companies are actually seeing tremendous upsides. And I was watching a conversation between Sanjeev Bikhchandani and Vijay Shekhar Sharma at the Times Enclave. And Vijay Shekhar Sharma was making a point that for a lot of Indian companies which currently are loss-making but have prospects in the future, SPACs are probably the only way that they can tap into the global money markets, because the Indian markets, as they are, will not give them any kind of valuation or rewards despite the business models that may exist. Do you reckon that could well happen in India? We may see a large advent of SPACs in India.
I'm not sure. I think obviously, there has to be some rules around it, and I haven't seen any of those at the moment, from SEBI. So maybe that's coming soon. I think there's enough funding, out there. Maybe not for to get listed, but we saw one the other day, with a $5 billion valuation. So these are kind of expectations that on the private side, companies can have. I think it's when you get to the listed side, obviously, there's more about delivery to some extent. So I'm not sure about the special purpose acquisition companies in India at this moment. And I'm not hearing that this is a big problem for companies raising money. But I did notice that SEBI had eased the rules for companies to be listed, in terms of the these tech companies. So maybe that's something which will help them get to a listing a lot quicker.
Okay, now let's get back to mainstream. Now, Andrew, my question is this. You spoke about the major highlights. When one looks at the Asian screen as well, I mean, China is a separate case in point, right? The markets have retreated 15-16%. And a lot of people say that they're now seeing the effects of the post-pandemic stimulus being taken off, or the conversation around that really impacting sentiment. But I'm guessing there are other factors at play. What do you reckon is in store for one, Chinese markets and therefore the commodity stocks out there, and two, the rest of the Asia Pacific region, as most of these markets have retreated from the highs that they clocked in sometime in the last 6 months, whenever they did?
Yeah, I think again for the Asian economies and countries and markets is that you're bound to have these risk-off trades happening. I mean, it's going to continue to be volatile in the next 3 to 4 months, and we're going to have risk-on and risk-off trades happening very quickly. I think the theme that we're looking at is that over the next 3 to 5 years, millennials, which are 300 odd million in China, same here in India, and Indonesia's got a huge amount as well, will have that spending power. Whichever way I look at it. So the growth is going to be in Asia. That's for sure over the next 3 to 5 years. So, use these kind of times when volatility brings markets down, to keep buying because the growth prospects are in Asia, compared to any other place in the world. So I think, I'm even seeing forecasts of China now being raised from, that the Chinese official forecast is 6%, but I'm seeing forecasts of GDP growth of 8% plus for this current year. So it's to say that the markets come off from the highs is fine, and you're always going to see that in a long term kind of move upwards. But I think Asia is going to be the destination for most foreign funds for the next 2 to 3 years.
Yeah, interesting. And therefore, my question is, where does India fit in? We've had a fabulous 2021, arguably the best year in terms of capital gains or market gains since maybe FY10. You reckon the momentum, if not the pace, can continue into FY22 as well?
See, I think what you've said is that really the market's kind of risen from the bottom of March. But if you look at if you went from March to March, I think we're 15 to 20% higher, compared to where we were just before the pandemic. So it's a normal kind of rise in a market. Yes, it's hugely volatile over the past year. So I think if we're looking at earnings growth and we're thinking 20 to 25% for the next year and the year after, I know there's forecasts out there saying 30%, but we've been a little bit more cautious. That would lead me to think that the markets can rise by another 15% from here. The upside to my forecast is a combination of two things. One, if the real estate market is taking off, which it seems to be, which if you combine that with the infrastructure spending which the finance minister has outlaid, going forward, then that multiplier effect across many different industries could be very, very significant. I'm really thinking that the 15% kind of rise in the markets is doable for the year ahead from where we are today.
From where we are today, at the end of FY21 and the beginning of FY22, where are you most bullish on, Andrew? Let's say tactically and let's say fundamentally, both.
So it goes back to the economy-facing sectors, because unless we see a lockdown, a severe lockdown again, and the global economy also sees the same kind of problem, I think. I think this time around, even though the number of cases are going up, we go into less, I'm not saying less concern, that's the wrong word from a health perspective, but I think we have in the back of our minds that there's a vaccine around the corner and it's being rolled out. So it's just a matter of time before this will hopefully come to an end, although people do talk now about it being a yearly event where you have to have a vaccination. Let's see. So unless the whole world kind of grinds to a halt a little bit, then the economy will grow 8-9%, if not more, in the current year ahead, and that would be augurs well for those economy-facing sectors, the banking sector, energy, industrials, and consumer discretionary, because we're all going to spend money, right? I mean, we've got a holiday coming up. I'm sure most people are taking that time to spend money within India.
Yeah. Excuse me for that. Okay. Actually, which was going to be my next question, Andrew, that some of the economy facing themes, to an extent, have seen the recognition that, yes, there is merit there. What is not seen recognition, and maybe rightfully so, is things related to discretionary spend, things related to leisure, and things related to travel in particular. Now, all of these industries are not dead, just that when do they come back is a question mark. As an investor, do you get tempted to park some money into some of these, be it baggage makers, be it hotels, be it cinema halls, or malls, or are you saying that let's do it when the time comes? There are other themes to play any which ways.
No, I think these are themes to play. I mean, you might have again, short-term setbacks, which we've been seeing recently for some of these sectors. But let's fast forward another 6 months. Well, for the rest of this year, it's unlikely that any of us are going to be able to travel extensively overseas. That's for sure. So let's take a scenario where hotels can increase their capacity from 50% to 70%. All of that goes to the bottom line, and we'll all want to do it. We'll all want to go to a hotel, just to get out of home and just have something different to do. So the travel is definitely going to be within India. So that's going to bode well for airlines, hotels in particular, and obviously, the valuations are kind of more compelling. It just depends on whether you think that this wave is going to cause more restrictions short term, which will have a setback for the earnings of these companies, or you think it's going to we can muddle our way through for the next month, and the number of cases will come down, which then you'll see a big increase in the share prices. So I think you can get your timing wrong by a month or so, but I don't see that these stocks would not be part of someone's portfolio in the next should be part of your portfolio for the next 1 to 2 years.
Great. Okay, Andrew, last couple of questions, and one on a space that is getting formed, so to say. I was watching with keen interest two things that happened. One, the valuation uptick that Dream11 got, and two, the mammoth subscription that Nazara got. Now, there are different spheres on the gaming side, but both of them have a connection to gaming, so to say, right? What's your sense as new themes start getting formed and become a sector of sorts, so to say? Though it might be too early to call this a sector, but these gaming tech-enabled niche businesses, which might have erratic profit-making past. Do you reckon that they will see the fancy? Are you tempted, for example, to look at these businesses, because you would have looked at similar businesses around the world any which ways? Are you tempted to bet on these businesses in India?
One, they're not listed, so it's difficult to.
Are you watching out for them?
Yeah, no, we are, because listen, gaming is going to be a whole part of how we live now, right? It's changed. I was talking to someone the other day who was telling me I just must get onto some football fantasy where you can bet and everything. So I will look at it because it's something that I think we're all looking to have a something to do if the lockdown continues, and I think we're all going to still be a little bit wary of rushing out and doing things. So having entertainment, and it's not just watching Netflix all the time, is going to be a way forward. And sports is it's just huge, right, in India, but particularly cricket, but now increasingly other sports as well. So I think the potential is just huge. So yes, we'll be definitely looking at these companies.
Okay, and Andrew, one last question on what is kind of turned out to be a bit of a dog of a space. Back in April and May, nobody could get enough of Bharti, and the stock prices or the predictions went through the roof. Reliance and Jio got oodles of money. Off late, it's been very, very quiet. And we all know Vodafone Idea, despite all the promise of the fundraising and multiple announcements or multiple mentions of they being on the cusp of a fundraise, whether debt or equity, nothing's happening there. What do you make of telecom? It's such an integral part of our lives, but somehow the investor interest or the stock price gives you an idea that the investor interest is not sustained and is not too strong.
See, I think again with the telecom sector, along with say the IT sector and pharma, which were and to some extent FMCG, were your lockdown stocks, right? I mean that they were the ones who were showing the most growth, the most enterprise. But as the market opened and the economy opened, then you go back to those economy-facing sectors. It doesn't take away the kind of long-term prospects for the telecom market and what's going to happen. So I think, we will. I think investors will look back again, very carefully into this sector. I think it's looking good value because it hasn't done very much, as you just pointed out. After a great run last year, and maybe some of the expectations need to kind of come to fruition in terms of maybe some price hikes by the main players to get the momentum back in the stocks. But underlying, the growth rates are superb. So it's a great area to be in, to my mind.
Okay. Well, Andrew, certainly some of the bulls in those stocks would be hoping that what you're saying, or will take comfort from what you're saying. But it was lovely talking to you today, Andrew Holland. Thank you so much for taking the time
Thank
out and
you.
being with us. And all the best for the times ahead.
Thank you. Bye.
And viewers, thanks for tuning into this edition of The Talking Point.